Yahoo Finance's Julie LaRoche sat down with billionaire bond king Jeffrey Gundlach, and she actually physically sat down with him, which is something we haven't been able to say in a while. And she did it at DoubleLine Investor Days in Los Angeles for an extended discussion. They talked about higher taxes and the California exodus.
Well, it incrementally helps, but I don't really think the tax proposals that have been floated come close to paying for the spending. I mean, I'm going to repeat that government spending is more than half paid for by deficit. It's an incredible fact that most people don't know. In fact, for the fiscal last year, it was 56% of all government spending was borrowed. Now, one thing about these stimulus checks is, on the surface of it, people might think, well, if we give money to the poor and we take it from the rich, we're going to help get rid of wealth inequality. But there isn't any historical reason to believe that that would be the outcome. Once we go into a unmoored type of monetary and fiscal policy, which is territory that we've entered, we can go back at history and look at what happened in prior examples. And it's pretty depressing to do that, because the outcomes are often civil wars, revolutions, like the French Revolution. They went off the gold standard in the 1770s, and by the late 1780s, there were basically riots about food, and there was the Women's March, where they started at the bread market because they couldn't get any bread. It was too expensive, or else there was a shortage of it. And they were so upset by it, they finally couldn't take it anymore. And they marched, the women started it, they started marching towards Versailles, where Louis XVI and Marie Antoinette were. And they did it in the pouring rain. And many of them, I suspect, didn't even have any shoes. So why did it come to that? Well, the money printing and the giving away ended up making the middle class poor, and the prior poor class starving to death. And at the other end, the people who were controlling the levers of the money printing became more wealthy. So it isn't really the case that these tax increases will pay for this spending. And if we go to another level of free money, I think the wealth inequality will get worse. What do I think about the stimulus that's happening is it's being very beneficial to U.S. consumption, but it's not really developing our productive base at all. So we have more consumption, but the consumption is stuff coming in from China. So Chinese GDP is booming because we're buying all their stuff. And so that's exacerbating that problem as well. And it comes through, and I'm oversimplifying here, it comes through Amazon. Mm-hmm. Amazon does a very large share of this business. So we've got one of the richest people in the world, Jeff Bezos, is getting made fabulously more wealthy because of the government's giving money to the people that they are. And so that's kind of how the mechanism works. So the stimulus hasn't helped our productive base. It's helped China, and it's helped certain very rich people in Silicon Valley and the like. And that's where it is. I think the wealth tax is primarily vengeance, really. I don't think it raises very much money. And it just seems like I am in the camp that wealth taxes ladled on top of our current tax system basically punish success. Now, having said that, I would love to have a wealth tax, but only a wealth tax. I think wealth tax makes more sense than income tax. The income tax, though, system is so convoluted that it's almost nonsensical, and it's completely unfair. In 2012, Mitt Romney ran for president, and he put his tax return out, and he paid something like 14% in income tax relative to his income. I made about as much money as he did in that year, and I was paying 50%. So I don't like the idea that the income tax system is completely unfair, even at equal income levels, because of tax shelters and carried interest and all these things that are just crony capitalism, essentially, through the tax code. I would get rid of all of that and just have a wealth tax. But to put a wealth tax on top of the income tax, that's really problematic. You mentioned the capital gains tax. For those making $1 million or more a year, the proposal is to take it to basically 40%, which would really affect things very dramatically. That would be sort of a shock to the financial system, sort of like the pandemic was to the healthcare system. And if you put capital gains tax together with a wealth tax, then you've really got a problem, because if you have a company that's worth $100 and they tax it between California, who's proposed 1%, and some talk in Washington of around 2.5%, you have a 3.5% wealth tax, and the tax collectors are the judge, the jury, and the executioner. They're going to tell you what your private business is worth. It's really worth 100. They might say it's worth 200. They're probably going to estimate it in their favor, which make the wealth tax 7%. So if you paid 6 years of wealth tax, it would be 42%, and then you sold your company for 100, you basically pay all of the proceeds from having done it previously with the wealth tax and then with the 40% capital gains tax plus California's tax.
Yeah.
It's all gone.
Well, you mentioned California, and I live in Miami now, so I'm seeing a lot of Californians come in to that city. So in that scenario, you're a business person. You employ people. You have a business here in California. What would that mean for someone like yourself?
Well, I think it's one of these situations where you look around, and it seems like a lot of smart people who are wealthy that made their start in California have already left. You know, Elon Musk, Joe Rogan, Ben Shapiro, Oracle, Hewlett-Packard, the big companies. I can tolerate it for now, I guess, but I'm at 13.3. If they take it to 16.8, which is proposed in Sacramento, and the federal goes up, it's going to be hard to really endure the California taxation. Plus, California services are among the poorest in the country. So you're paying a very high tax, and what we're receiving is an explosion in the past 18 months of homelessness, the infrastructure is crumbling, and crime is soaring. And yet you're paying ever more increments of taxation. At some point, I think basically they're going to realize everybody's going to leave.
What would be the first thing you would fix?
I would run a balanced budget.
There you go. One of the things we talked about last summer was, you were talking about this kind of impending wave of white-collar layoffs. Where do you stand on that as it relates to future of work, and has that view been adjusted as we've seen kind of anecdotally more people who are white-collar jobs who are just kind of saying, forget it, kind of taking off and resigning. Where do you stand on that prediction of the white-collar wave layoff?
I think it's still coming. I think it's middle management is what I'm thinking about. I think when you do things virtually, when you're working virtually, you don't almost need middle management. You kind of you're organized in a way where everybody's interacting, and I find that the Teams meetings and the Zooms, they give us an extra perspective into who's really working and who's just kind of watching other people work. And that's the basis for my thesis, that sort of middle management will probably be thinning the ranks of that. So we'll see. I think there's a lot of question marks relative to California, where we've been locked down more than other places, and there's a lot of confusion and varying ideas as to how to go back to work. So we polled our employees, and we're not very different from the broader surveys nationwide. A lot of people want to work from home a couple, 3 days a week, and that's a big shift. And I just think part of figuring out the plan of going back to work at offices, at least hybrid model, I think part of that will involve right-sizing your middle management force.
Well, that was DoubleLine Chief Jeff Gundlach, known as the Bond King, but talking about a lot more than bonds, everything but bonds in that particular clip. But you can watch that whole interview on yahoofinance.com, and we will be playing different pieces of it throughout the day.